Alright guys, I am back again with another video, and in today's video we are back with our Ichimoku Weekly Weather Report, where we will be focused on the Forex market using Ichimoku analysis. I also have another series coming out, guys. It's going to be called Decrypting the Cryptos with Ichimoku. That's going to be coming out this week, probably Monday. You'll see the first video, and I'll be doing that on a weekly basis. But today we want to focus on the Forex market. So we're going to analyze the Forex market using our Ichimoku concepts, go over all kinds of trade setups that we may see, if there are any trade setups, also give you levels to look for possible trade opportunities. And guys, if you like anything that I'm showing you today, please give me a thumbs up. All right, and also subscribe and hit that notification button so that you can be notified each and every time I put up a new video, because I'm going to have quite a bit coming out in the next couple weeks here. And also, the very last thing I want you to know is, if you like the platform I'm using, look down below. There's a link to the platform, Quant Tower, I'm using. Click that link and it'll give you an opportunity to try out the platform, see if you like it, and possibly start using that as your professional trading software. All right, but let's get straight to this video. We got a lot to talk about. Want to show you some things, so let's get right to it. All right, guys, before I get started, please take a look at my disclosure statement. Please understand that I am not a financial advisor. Please know that everything that I do and show you today is for educational purposes only. If you decide to take upon anything that I am showing you today, please do consult with your own financial advisor so they can help you assess the risk associated with trading Forex. All right, so please understand that. And always, before I get started, I like to give you a word of encouragement. Today's word comes from 1 Thessalonians chapter 5, verse 16 through 18, which states, "Rejoice always, pray continually, give thanks in all circumstances, for this is God's will for you in Christ Jesus." So our joy, prayers, and thankfulness should not fluctuate with our circumstances or feelings. Obeying these three commands, rejoice always, pray continually, and give thanks in all circumstances, often goes against our natural inclinations. So when we make a conscious decision to do what God says, we'll begin to see people in a new perspective, and we'll have an easier time being joyful and thankful. God commands us to never stop praying. It would be impossible to spend all of our time on our knees praying, but we can always have a prayerful attitude, regardless of our posture, place, or situation. Such an attitude is built upon acknowledging our dependence on God, realizing his presence with us, and determining to obey him fully. Then we will find it natural to pray frequent, spontaneous, short prayers. Regular times of prayer will lead to God's transforming power in our lives. A prayerful attitude is not a substitute for a regular time of prayer, but should be an outgrowth of those times. Amen. All right, guys, so I'm ready to get it going, ready to help you to see if we have any kind of trade setups, any opportunities we have with Ichimoku, and basically looking at the Aussie CAD daily time frame. So I'll be using pretty much the daily time frame for everything and showing you what we have for the daily. Currently, this is in a bearish market, but based on Ichimoku, you could see where the cloud is crossing a couple times. So we're kind of flat. Then we had a little bit of a drop, but we're still flat. We got a bullish crossover. Chiku span is above price, and we got a bullish crossover. All right, so we got a bullish future. Chiku span's above price, and price is below the cloud, but we got a bullish TK crossover. So we have mixed signals. We have all bullish signals except for price being above the cloud. And so for me, what I'm looking at right now is price has been on a nice move to the upside, and I think price is pulling back to close to Kijun Sen. We may find support at the cloud. It's a little thin, but I think like what I'm looking for is for price to correct and then move higher. So if we can close below Kijinsen, I think we'll see more downside. We're a little bit flat, but see, here's the main thing that I'm looking at is that we have a low here, really this low here. Then we have our low here. So whatever this market does, if it creates another low, then we could see the market do this, might see that, and then we'll have this V formation where we see the market move to the upside. So currently, like when we talk about Ichimoku, we're talking about wave formations to understand what the market's doing. So we see this wave right here, right? This is an N wave. So that wave was completed. So now you want to see the next wave. So we started from this high to draw this wave. All right. So the next wave is going to go like this. We start from this high to draw this wave. So we want to see if we're continuing. So in order for this to continue, it would have to actually violate this low here to continue that wave. All right. If it doesn't, what happens is it either comes down near this area, then you get into some kind of a formation where you may see something like this, which will then give us like a P wave formation. All right. And then maybe the market breaks out to the upside or downside. But immediately the way that I'm seeing the market is this. So to continue that N wave, this last N wave, I told you we have to have this violation of this level. But if we're going to get a 1, 2, 3 reversal, which is a reversal N wave, we're going to see the market do this. All right. So if it's going to do that, where's it going to find support? Maybe this Kijinsen. All right. Because we got our crossovers bullish. We're bullish here. Chikou span's bullish. Price was above the cloud. Now you're getting your correction. Okay. So with that correction, if that correction doesn't take us below Kijinsen, we find support at Kijinsen, we could get that move to the upside and see this market move a little higher. In order to really break structure, there's levels that you're going to need to violate. So for me to see this market, you're going to need to break this structure level here. All right, are there. So this move didn't break this level. So now we need to see the market really break this level. You're between these two levels here of structure. For the market to violate this level, that will continue our N wave, will stay bearish. But if we start to violate these highs here, if we violate this high, we're going to see the market move to the upside. I would be looking for my trading opportunity at Kijinsen to see if we get a bounce off of this level and then a move higher. At that point, we'll be trading. I always talk about the 1, 2, 3 formation or the N wave, and I'm talking about taking trades at the 1 level. At the 3 level. So here's the 3 level. So if we're talking about an N wave, we're thinking that the market's going to do something like this. So you would be 1, 2, 3, and then we shoot for 4 with Ichimoku Observation Theory, and I'll show you that in a second here. But what I'm looking at now is if we correct in this area, then this becomes 3. This is where we get into our trade. I'm always trading the 3 level because basically the 3 level is going to be a pullback trader. Okay, so I can show you that on every opportunity. So like if I wanted to trade this Kijinsen bounce here, the market drops 1, 2, 3, and then 4. That's your N wave. So you have 1, 2, 3, and 4. You're always trading at 3. That's where you want to be trading. You don't want to be trading at 2. 2 is the fluctuation level. If market doesn't get through 2, it's going to fluctuate. All right. Or pull back far or deep, get a deep pullback. I don't know how deep the pullback could be, but at this 2 level, it's fluctuation pretty much. And it also represents that structure level that you need to violate to continue. And here we didn't really violate it. The market pulled back and moved higher. Okay. But see now, again, where we are now, we still lower highs, but we're starting to get closer. And then my issue also is this. Look at these crossovers with the cloud, right? You don't want to see them kind of crossovers with the cloud. All right. It's too many crossovers with the cloud. So pretty much you're flat right there. And that represents the market being pretty flat. So we don't want to see a flat market. We want to see a market that's moving to the upside or moving to the downside. So therefore, for us to move to the upside or downside, look for this correction maybe at this point and then higher. All right. And that will give us our N wave. I'm going to show you where the target points are going to be for that trade. But also when I look at the market, I'm also looking at, hold on one sec. What was I getting ready to tell you here? So when I'm looking at the market, my correction, I'm also looking at my fractal levels. So when I look at fractal levels, that's where I look for the market to pull back and bounce. So I'm looking at structure levels. So we'll look at that real quick so that you can understand that when you're looking for an opportunity. So when the market's moving, I'm always looking for the market to pull back to structure, which are these fractal levels, which are very important. So on a downtrend, I'm looking for the market to pull back to bull fractals. All right. When you're going to get a video from me this week talking about order blocks. These fractals are going to fall in line with order blocks. Also, they're going to help you when we talk about order blocks, because you can trade these levels, order block levels, fractals, and pretty much support and resistance, and you'll be good to go. But let me show you this right here. So I'm always looking for, this would be a fractal here, right? So I'm looking for the market to break this level. So as you can see, the market broke this fractal right here. It broke it, it pulls back to it, and that's where you get into your trade. Remember I told you you always want to get into the trade at the 3 level, right? So if I'm taking this fractal bounce here, also a Tinkinson bounce, if I'm taking that trade, it's a fractal level and it's a 3 level. So let me show you. So first the market said 1, 2, 3, and then 4. So that was your 1 N wave. We started from this top. Then we're going to draw the next one. So now the market said 1, 2, 3, and then 4 for this N wave. And then where did we get in the market? Not 1, not 2. We got in at 3. And then we shoot for 4. That will be our profit target. All right. So therefore, the fractal level is valid. And I make these into zones. I'll show you better fractals as we go on. So therefore, looking at this market, those are the types of things I look for when trading Ichimoku. I'm looking for trading off of the bearish bounces of fractals. And also I'm going to be looking at trading Tinkinson bounces, Keatinson bounces, fractal bounces, and order blocks. All right. We'll be trading order block levels. And pretty much that's it with Ichimoku. Okay. So let me delete that and show you any other fractal levels that we look at. So watch this. We'll move that one out. So this would be another fractal. The market kind of pulled a little higher than this fractal level, but it broke it, pulled back a little bit higher, pulled up to Tinkinson, and then that was it. All right. But then in the process, it came back. We made another fractal. Here's the fractal. I make these fractals into zones. All right. This is my favorite setup. It's a S-wave setup. When we talk about Ichimoku, it's a S-wave setup. I'm going to show you real quick. So we talk about Ichimoku wave analysis. The normal wave is the N wave structure, right? Well, then we also got, in that N wave, we can also have a S wave, which is, so if I'm looking at this market right now, this is the N wave structure. All right, but it's also a S wave structure. This is right here. And that's why it's a S wave trade for me. I love this trade. It's probably my best trade, one of my best trades, probably my best trade. This is the S wave structure. Now, I always tell people this doesn't look like a S wave to me. It looks like a Z wave, but it's called an S wave. And then this is where you trade it. And then this is where our profit is. All right. It's the continuation really of this N wave. It's a Z wave formation because what happens is the market makes this point here and it comes back to that point over here. And in the process, it's this. And this is where you trade it short. And then the same thing for the long opportunities. And I'll show that as we go. Don't want to beat a dead horse on this side. All right, so I'll show that as we go. But the thing I'm looking at is right now, that's why a lot of times you'll hear me say no trade, because I only trade the market at levels. I usually don't trade the breakouts because we get to like I told you, I like to trade the 3 level. And when we break out, we're beyond the 3 level a lot of times. OK, so I want to trade the market when it corrects off of this big move. Now, will it stop? I don't know where it will stop, but we have levels that we look at. And this right now is this Keatinson is the last level. So when I'm talking about trading the fractal bounce to the downside, I also look at trading those to the upside. Now, this is a fractal right here, but this is another fractal area. So I'm going to draw this zone right here. This is a fractal right here, and I'm going to draw the zone. I'm going to make it into a zone. So we could see the market come down to this level before we get an opportunity to trade it. We'll be bouncing off of this fractal zone. We broke this structure. We broke it. So this is, again, the S wave. This is a bullish S wave. All right. And we broke structure. This is structure right here because it's the fractal. All right. So that's going to be structure level. When in a bear market, we're usually breaking the bear fractals. Now, people are going to talk about the fractals and not understand what I'm really talking about when I say bear and bull, because some people are going to think that the bear fractal is the upper fractal. But we talk about the fractal in the direction that we're going. So to break a bull fractal, you have to break the top fractal. And if you think about like Bill Williams, he talks about fractal levels, and for Bill Williams, the fractal is, the high fractal is a bull fractal. The low fractal is a bear fractal. All right. So with this fractal, we're thinking the market's going to come back to this level over here. So in reality, it was 1, 2, 3, and then coming back to this level. That would be your S wave right there. And then and then also, it's going to give us our N wave if we can get that. So now where would our targets be? All right. So I don't know where the market, I can only get the target where once we start to move back to the upside, but I'm going to estimate some targets here. Okay. So if we do pull to this level, let's say the market doesn't go any lower than where it is right now, then we're going to be looking at this. Let's say it ends right there. This will be our N wave, our N target, our N value, where the green is. This will always be our E value. So I automatically have the N value and the E value, the most popular values that we're going to really need. We don't really need the NT level. It's not that big of a deal. To me, NT level always falls near the 2 level, this 2 level. So I know I got to get through that 2 level. And then the V level usually falls near the N level. So the two that are most popular and most levels we're going to meet at are going to be this N level and this E level. So when you make a trade and you get into the market at the 3 level, you're shooting for 4, which is going to be the N level or the E level. So what I'm really trying to tell you is we're going to get a complete N wave. So then our target will be here if the market doesn't drop any lower. And then we violate this candle, and then we get into a trade move to the upside. This would be where we would shoot for our first target, or else it could extend to this level, will be our next target. This is our E value. This is our N value. All right. That's what you're looking for with Ichimoku for targets. Now, the last thing is, the very last thing, and I'll get off of this one. I don't know where the market's gonna go. So let me mark 2 things. So this is our N value right here. All right, so let's put that as our N value. But if the market drops lower, let's say it drops to Kijinsen, then that N value is going to change. It's going to move to, then lock that. It's going to move that level a little lower, which would then be here, right? That level would then be here. If it drops to the bottom of the zone and then retraces, then that N level is going to drop a little bit more, along with the E level also. So we would be there. So I can't really get the target until I'm sure this is a bottom here. And sometime you're wrong at that point too. But once I get support, like I do have the fractal level, then I'm able to get a bounce off of that level. Now, we also may hold at this fractal, but we closed below it, so I'm not going to count that fractal zone. I'm going to just look at this zone, and if we just close at Kijinsen, then we're going to be shooting for a target up into this area anyway. All right, because again, we'll have our N wave, and that's what the market shoots for, that N wave. All right, so that's what I'm looking at with Aussie CAD. I'm not going to spend that much time on all these other assets like that. I know I tend to make long videos because I really like to explain this stuff to you guys and help you to understand and see what I'm seeing. So that's why I'm a little bit long-winded sometime, and it helps you to, even though there may not be a trade for you at this point, it helps you to see other assets or other markets when you do have an opportunity for a trade. Okay, so sorry if I'm long. Aussie Swiss franc, not in love with this thing by any means because we flattened out here. We're still bearish. We got a TK crossover that's bullish, but our cloud is bearish. The problem with the cloud is that it's flat. So look at the flat cloud. It's pretty much flat. All right, look at the market. It's pretty much flat. Not doing much. Your crossover is bullish, but you're flat with Tinkins and Kijins and no momentum at right now. So you got a bullish crossover. Chiku span's below price though. All right, and you're below the cloud. So this is bearish at this point. And we haven't really broken structure, okay? Now, we did make a higher low. All right. So we made a higher low, which could be just a slight pullback. In order to see more, we want to see this structure level broken. And then we would start thinking the market was in a reversal. It did create a 1, 2, 3 reversal that didn't really complete. We did have a couple N waves in here. So watch. This is so for the market to come down. Let's say we come down. We need to come down, come up, and then we needed to continue to make that N wave for continuation. But that didn't happen. So we had a smaller wave here, which was this correction. It could be just a correction. And then we had another wave, but we didn't violate this level. All right, so we're kind of in between here. At this point, I don't feel comfortable with anything right yet. Our crossover is bearish. Everything else is bearish. My thing is, I'm not going to trade this until we break out of this box. I'm going to box this in and show you what I mean. I like to box the market in and then realize where we're going. So if it's going to move to the upside, it'll probably break above this box. And what will happen is you'll see this continuation of this N wave here. All right. So this would be the N wave structure. It might not go too far, but we'll probably get up into this cloud area. And then if we break that, then we start to see full-blown moves to the upside. You got a bearish crossover. It's a weak signal, but the cloud is super flat. You're not getting anything strong. There's no opportunity for me to trade this. There's no opportunity for me to tell you anything at this point. The main thing I'm going to look for is if we do violate this box to the downside, then I'm going to think that the market's bearish. We would shoot for this level at least. And then if we can get through there, then we're full-blown moving to the downside. All right. If we break out of this box to the upside, I showed you what may happen. Break to the upside, it'll give us this N wave structure, right? But it might not be much of a move that big because the 1-to-1 ratio, which is a measured move really, which also is the N wave in Ichimoku. So some traders would know this as a measured move, but you realize it's part of Ichimoku wave analysis, which gives you this N wave structure. Also the 1-to-1, which gives you Ichimoku observation target levels, which would be this N target. Let me draw it out fully. See exactly where this is so small, but just want to see where it would be. Because we have this, if this is going to be the completion of this level, then we could see the market push up to about 67,440. And then if it's going to be even stronger, it can push up to 68,292. But I'm not saying we're bullish. We may have a correction at this point. Let's see what the market is. All right, yeah, so that's what I'd be looking for. But if we break the box to the downside, then all bets are off. Let me show something else here too. Something else that I'm looking at. So I told you we had this N wave structure and we don't have the continuation. Now, if we look at big picture and we say that this N wave is like this, then what would happen? So if we violate this box, then we shoot for this 2 level. But then we look for our N level also, which is going to be, let me draw that out too. Put that N level on here. That bearish N wave, if it can develop. That would take us down to about 61,599 and maybe see some action at about 63,555. Now, it depends on how we break out of this box, if you ask me. So A break above would set off, like I told you, for the N wave to the upside at those target levels. All right, so let's move. Aussie yen. I already drew these levels. I was looking at this market earlier. And what I'm seeing here is, so I do know this is a 3 level already. So we have an N wave. We're shooting for the 1-to-1 target. Let me show you what exactly is happening here. You have an N wave. It's a bullish N wave. This is the target, the N 1-to-1. A 1-to-1 is just the same thing as, watch this. It's just saying this. I'm going to measure it for you. I'm going to do it just like this using this. So this leg extends up to this point right here, which would be here. So this leg is going from here to here. So all we're saying now is that an N wave is going to be, see this leg? It's the same length as this this line I drew. So this line is the length of this leg I just drew. If I put this leg on the 3 level, then we're saying that the market's going to move that far. And that's the 3 level would give us that N wave. So we're saying this leg is going to be this. We're saying this leg is going to be the same size as this leg, the previous leg. And if that's the case, you have a 1-to-1 measured move and you hit this target. All right, which is at 83,917. We're at that level. And at this point, we can see a little bit of divergence developing here on our KRI, which is our carry relative index, which is a Japanese tool that's been pretty much forgotten. So I'm trading with all Japanese tools right now. Candlesticks, carry, Ichimoku. So everything Japanese traders use or had used or have been using. Therefore, I'm trading that concept. Therefore, you see where this would N wave would be. So this would be, again, we are sitting right pretty much at this N wave. And I'm thinking we're going to see a correction. And then this is our E level. If the market's going to be strong, it'll get up to that level. It looks like we may find a top here. Then we could get a correction. And then a continuation to the upside. All right, we broke structure. I'll show you where structure was. We broke structure actually right here, because this was the bull fractal that we violated. This is the higher low. This is a low. We made a higher low, higher bull fractal. I mean higher bear fractal. Fractal, fractal, bull fractal, higher bear fractal, breaking a bull fractal, and then moving higher. Now, if I'm going to tell you that this is, I wouldn't take a trade here for sure. This is where, and that also lines up with a breakout, all right? The Kumo breakout. But I wouldn't take this trade because it's a 1-to-1 measure move. I would wait for the correction. So if I'm saying that, then where's my correction level going to be? Remember we talked about trading at the fractal levels? Well, I'm going to look for a fractal level bounce. So we already know where this target is. So let's get rid of that because we already know that target. We're pretty much at it. We're sitting right at that target. So I'm not expecting the market to move much higher. I'm looking for a correction before I get into the trade. But there's a current fractal level that we're looking to trade at. So you want to mark these fractal levels because this is where the market could pull back to. And then this is where you find price action and the market bounces. So I'm looking at the market bouncing on Kijinsen, but if it doesn't get that far, it's going to bounce on. It'll be confluence with the bottom of the cloud, which is a support zone. And you'll have this fractal zone right here. All right. Bull fractal. Market violates, pulls back. This is going to be, again, another S wave. Let me show you. That's what I'm looking for, is this S wave trade. Boom, 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 boom. That does not look like an S. That looks like a Z. All right. A drunk Z. That's what it looks like to me. But anyway, then this is where we look for the market to move. So if that's what the case is going to be, let's shoot for where our target's going to be again. So I showed you the target from this move. So the target was from this move, and this is where this extension is. So I'm thinking if the market corrects anytime soon and pulls back to this level, we already have levels that we can mark. So we have to say this is going to be the bottom. Let's say this is the top right now and we don't go any higher. Things could change though. I got to see what happens with the market. I'm saying 1, 2. I don't know where the correction is going to be, but let's say it's at the bottom of our box. Then we would shoot for 85,315. and then maybe to the E level. So our two levels are going to be E and N. N is always green. All right. E is always red. All right. So I'll know that's how I know those two levels. Don't have to even think about any other thing, any other tools. I don't worry about the NT level because it's usually, I can figure out where it is, and it's usually around this 2 level. And then I don't worry about the V level because the V level is usually near the N level. So therefore, like the V level could be like right here. And I really don't need to have all these levels on my chart. I really need to have the main levels where I see reactions happening, and it's going to be those 2 levels. So therefore, I don't have the NT level and the V level on my chart. All right. And it's easy for me to get the levels because I'm just using my Fibonacci expansion tool. Let's get rid of those lines. So if we do pull back that deep, that's where we'll shoot for. Again, we don't know where we're going to pull back. We don't know if this is going to be the high anyway. So we have to wait for this move to start correcting before we can start thinking about where would we get into continue with the long trade. And we broke structure again. We broke that level. This would be structure to continue back to the downside, right? So if you break that structure level, all right, and then once we get into a trade, say we pull back to this level to continue our trade, we break this structure level, and then the market just keeps going and so forth. But then once you break structure to the downside, then you see the market change. Usually when we're moving to the upside or downside, not always, this isn't no rule, but this is something that you could look for. It's like really, really good. In a bearish move, all right, let's say in this bearish move, we usually don't break bull fractals. All right, we usually don't break bull fractals. Bull fractal levels usually don't get broken. And that's not a rule for sure to say they will. But that's something good to look for. But usually, mostly all the time, definitely if you're going to continue higher, you do break the bear fractals. So you'll continue to violate these low levels, right? And then once you don't violate those levels, and then you violate structure, then that's when you start to see the move to the upside or a directional change. Oh man, I might be going too deep with some of this stuff maybe. I hope not. I don't have anybody in here with me today. I'm not live today, so hopefully I'm not going too deep with this stuff for everybody else on YouTube. If you have any questions, please just put them in the comments and I'll definitely answer your questions. All right, so let's move on to the Aussie New Zealand dollar. Aussie New Zealand dollar, again, this is another one that's moving to the upside. Now, we violated levels here. We were flat here, and you could see the cloud. We had too many crossovers. We had a crossover here. We had a crossover here. Then we had this crossover. But then finally, we started seeing angulation. That's where we got this move here. All right. So the market's moving to the upside. So what are we looking for? There is some divergence. There was divergence. So I'm thinking the market we may see a move to the downside. We may violate this structure. Currently, we have not violated any bear structure. All right. So this would be the main structure to violate to see the market drop even farther. But where we are now is going to be violate this level to move lower because we're sitting on top of the TK zone. All right, here's your TK zone. We made a clamp. This is your Tenkan-sen. This is your Kijun-sen. Both are flat. This is like a C clamp. All right, and that's why I call this a C clamp. All right, and then it clamps down, gets tighter and tighter on whatever in between here. We're looking for the market to drop in between here because look what happened. Look what already has happened. So this would be 1, 2, and then this was 3. And we wanted to see where 4 was. So when we took our trade, if we took a trade at 3, now we wouldn't have taken a trade at 3 this time because 3 was, we were bearish at that point. But then the market moved higher, broke structure right here. And then it didn't really pull back to structure. So there's going to be levels that we're going to be looking for a bounce off of a trade right now. So what I'm looking for, I figured, okay, here we would see the market start to correct. But it didn't. It broke the end level. This is your end level. And it pushed higher toward the E level. It didn't get there. And the way we see things, we're flat. I'm thinking that we're going to see the market now correct, all right, and pull back a little deeper. Where would it pull back to? So remove this. Let's mark this fractal right here. You got a fractal level here that the market could pull back to. It's sitting on Kijun-sen. Now we also have a fractal zone over here, so we need to pay attention to this bigger zone, this zone here. So for me, I think basically what I would look at is this fractal level, because it lines up pretty much even with this fractal level too. So if the market does fall, does correct, look for it to correct inside this area here. Break this level and drop in here. Now, when you get distance on Tinkinson, Kijinson like this, when you get open like this, a big opening, the market does one of two things. It either sits up here and consolidates until Kijinson catches up, or it corrects when you get this big of a difference. And I'm looking for a correction. All right. And I'm not going to take a trade until we get past, we break below this level. Now, once we break below, we'll be trading at the 3 level. Let me show you again how this structure changes. So the market's moving down, we're bearish, we got a bearish end wave. So you started from that high, you got a bearish end wave. All right, then you go to the next high, you got a bearish end wave. All right, so you know the market, what the market's doing. Then you go to the next high here, you got a violation, you violated. So you now have a 1, 2, 3 reversal, or an end wave reversal. All right, so now you're saying start from the lows. You got 1, 2, 3, and then 4. So you started at that low and you completed the end wave. So now start at this low and you need to complete the end wave. So currently we have an I wave. To get down here we have a V wave, and then we need the end wave. Where would our targets be? It's going to be too quick for me to judge targets right now because we're far from pulling back. We haven't even started to pull back. I'm not going to call anything here. I want to see a violation of this level and then a pullback into this area. This is where I'm going to look to go long in this area. All right, because we have Kijinson in here. Start looking at price action. Now what I do, I walk zones. So when I'm talking about walking a zone, I'm getting into this zone here. I'm looking for the market to pull to this zone. If the market pulls halfway into the zone, I'll put a buy stop right up at the top of the zone. If the market pulls all the way to the bottom of the zone, I'll put a buy stop at the middle of the zone. I'll have my stop loss a little bit lower than the zone. All right, so I'm waiting for the market to get to the zone and then inside the zone before I do anything. All right, we got 2 confluent fractal levels that we can count on for support. All right, and looking for the bounce and move to the upside. So that's what I'm looking for with this. I'm not going to look for anything right now. I want to see a close below this level. All right, and then we can start to see. We got a lot of rejections up here, so we may see something drop to the downside. All right, so let's go to the next. Hopefully I'm not confusing you guys. All right, so this is a bearish market, but we have some changing taking place. One of the big changes you're going to see that the market has really changed bias, our level, is first of all, you break some structure levels. That's one thing. But with Ichimoku, there's going to be a couple other things. So first you break structure level, which would be this bull fractal. All right. So the market violates that level. Then you also see the 1, 2, 3 reversal. Let's look at it again. So this is a 1, 2. There's your reversal. That's your end wave, 4. All right. And then now you're going to draw the next end wave, 1, 2, 3, and then 4. So we know we're our directional bias right now, short term, really, you know. But in order to change bias, then we need to break structure here, break that level, in order to start to see more movement to the downside and to continue that bearish move. But when we broke structure here, right here, that was what we were looking for. All right, and the market moves. So we got a crossover here, bullish crossover. Future still dark. Chiku spans above price, sorry. So we have a one signal that's bullish, 2 signals that's bullish, but this is bearish and this is bearish being below the cloud right here. All right, so we got mixed signals. So therefore we want to be patient with this. A lot of times I told you we pull back to structure levels. Now I think we could pull back to Tinkinson or Kijinson. Look for that and then for the long trade. All right. But also remember, mark your fractal zones because you're going to look for trades off of those levels. So here's your fractal zone, your immediate fractal zone. you really haven't broken far past it, really. Okay, and then let's see if we're past our N wave values. Let's see what our values were. So we're pushing to get to the E value on this trade. So the market could probably push up a little bit higher, get into this E value, E area, and then maybe correct. All right, and it would correct back to this. I'm looking at still correcting back to this zone right here. So that would be the correction area for me. If we push higher, I'm still looking for the market to pull back to this point. So here's what I'm looking for. I'm not taking any kind of trades right now. I'm going to wait. If it pushes higher, you're going to run into a lot of resistance up here. So therefore, I'm going to look for the market to correct. Then I'm going to start to trade in this area. Then I look for the long. Then some people could look for the breakout of the cloud if that happens. All right. So that's what I'd be looking for right now. Let's move on. CAD Swiss franc. I'm going to show all these pairs to you. So we got to get moving. We're a little slow here. But the market was bearish here. You could see breaking bear structure, not breaking bull structure. When I talk about these fractals, these are the fractal levels right here. Another fractal level here, another here. Now, there's a fractal level here. We violated it. All right, so we're starting to see a pullback. All right, but the pullback, now let's see. I told you we trade these fractal levels, right? So let's back this thing up. Show you how you can catch these trades with the market a lot of times. So when the market breaks structure, which is these fractal levels, I mark it into a zone. And then I look for a trade at those levels. In this case, I would be looking for a short trade because here's what happened. I mark these fractals. Mark this zone because this is a fractal zone. The market broke it with this big candle and dropped way down here. Guys, when the market was down here, right here, or even if it went down here, I know where I want to trade. I'm not trading until I get to my level. I only trade levels, so I'm not going to trade the market till it gets to my level. So I already know where I want to shoot for my short trade, and it would be right here at this fractal level. Now, it doesn't always come back to this level, but this again is a S-wave trade. All right, so what we would be looking for, here's your S-wave. Boom, 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 and then short right here. Boom. And then you find your target. Let's see if it hit the target on the nose. Let's see. So you find your target. You will go 1, 2, 3. It didn't get the target. Didn't quite get that N wave target. Came close. You missed it a little bit. And then now it's pulling back. So I think we're pulling back to quite possibly Kijinsen here. There's no fractal for me to bounce on. If anything, we could, if we violate Kijinsen, we could push back up into this zone. So watch for your bounce here. What I have to look for is price action in order to get into the trade. So I want to see what happens if we get to the Kijinsen level. If we violate Kijinsen, then I'm going to be looking for this level here. Now I'm gonna be putting out a video this week. I said this last week, but I've got so much info that I've been trying to put on these videos that I get tied up sometimes. So I'm gonna show you what I'm gonna be looking for. There's a order block that I'm looking at. So first of all, I told you about the fractal. I look for the bounce off of this fractal and then continue to the downside. So my trade setup is either push up to Kijinsen here and short, or push up to this fractal level, then short. All right, everything's bearish. I wanted to show you what I was thinking about previously when I told you, and I didn't complete the sentence. But in order for the changeover, like when the market changes direction with Ichimoku, a big thing to look for is this. Look for Kijinsen to break Tenkan. Look for Chikou span to break Kijinsen. All right, so when you see the break of Kijinsen, with your Chikou span right here, Chikou span broke Kijinsen right here, that usually signifies the change of direction. Market drop to the downside. All right. So therefore, if you're looking for, like, let's back up one real quick. I think it was on this asset. This one right here, we're not full blown bullish, even if we get the correction and move and break the cloud, until we see Chikou span break above Kijinsen and be above Kijinsen. Now we have nothing to hold us back. Well, we still have the cloud here, but you need to break above Kijinsen. That's going to set off everything. All right. Sometime it may move to Kijinsen and then bounce off and drop to the downside. But that's one thing you want to look for when you're seeing these change of directions and these bottoms and tops. All right. For instance, let's go over here. Big move to the upside. The market start dropping to the downside. 26 candles. We see Kijinsen, Chiku span break Kijinsen right here. Therefore, we know we're pretty bearish and the market moves to the downside and gets a big move to the downside. Now we're trying to break Kijinsen to the upside with Chiku span. We already had a TK crossover and so forth. So those are the types of things you're going to be looking for. So when we go back to this chart here, we're kind of far from that. So therefore, I'm still looking at the bounce to the downside. We're far from breaking Kijinsen. So I'm still looking at the bounce to the downside at one of these levels. Now, I told you about order blocks. I'm not going to get big into the order block right now because I'm going to be putting out that video this week for sure. But this is an order block right here. What you look for is a bearish or bullish engulfing and you mark it up like this. That's one order block. So if the market pushed any higher, you could see it push to this level. I'm going to show you how to trade order blocks with Ichimoku. So no need to really get into that right now. To the downside, this would have been a bearish order block for me. I wouldn't have been trading it because Ichimoku was bearish, and we would have been looking for a long opportunity right here. But I wouldn't have traded this based off of Ichimoku, and we'll talk about that when I put the video out this week. But where we are now, I'm looking for a bounce off of Kijinsen or a bounce off of my zone here in the short to the downside. All right, CAD yen. CAD yen starting to be full-blown bullish. Again, look where we are with Chiku span, right? Look where Chiku span is. Hasn't broken above Kijinsen yet, but it's getting there. We got a TK crossover that's just developing. Our future's still dark, but you see span A rolling over. So span A is rolling over, flat cloud, but span A is rolling over. Probably going to see a correction again. Now, so no matter how far this goes, we started to break structure already. Now, no matter how far this moves, I'm going to still look for a correction before I get into the trade because this is where I'm looking to bounce off of. This is where I'm going to trade the market when it pulls back to this zone. So here's how we can see that what the N wave is. So we first started, we're going to start right here. 1, 2, 3, and then 4. We had the N wave. It's good. We're still bearish at this point. So then we go to this top and we go 1, 2, 3 cannot break this 1. Well, it did. So therefore we don't, the structure has been broken. The N wave to the downside has been violated. So now you start counting the bottom 1, 2, quite possibly 3, and then move to the upside. I can't give you any targets or anything yet because all we have is an I wave. Once we get a V wave, then we can start to mark the targets. But at this point, we can't mark anything. We're just going to be waiting for the market to pull back to this level. We got a Kumo breakout right here. If you trade Kumo breakouts, I wouldn't trade this Kumo breakout. We did have the crossover, and Chiku span is not above price at this point, and it hasn't violated Kijinsen. So I don't love this. I would wait for the correction, and then I would trade. That correction will be at the 3 level because we'll be 1, 2, 3, and then we'll be shooting for 4. I could give you a synopsis of where we might be shooting for 4. Let's just say we do stop here. This is the high, and then we do get a correction that takes back to this zone somewhere. Let's say it takes us right to the zone, then we move higher. Where are we going to look for our target? Our target is going to be this. This is going to be our target. 1, 2, 3, and then we would shoot for 1 to 1, which will be an N wave at 93,633, and then also the E wave at 95,991. That's just if everything falls here just like I got it. It's probably not going to fall just like I have it, so therefore we have to change those. But that's how you look for stuff. That's how you're going to draw your targets, your levels. And also I look to my left and I see what I got over to my left, and I shoot for those levels too, because that would then be a double top, and then I want to see what I got there if I have any divergence, and then I look for a short to the downside. Ichimoku will not allow me to short that. So those are the types of things I look for though when I'm trading the market. Swiss franc yen. Again, this is a very strong one. You could see this moving really good to the upside. I already have targets on here. So we broke structure, and you could see it's a good N wave. Let me mark this for you, show you the N wave and where it's going, where it could be going. Don't know where it's going though. 1, 2, 3, and then maybe 4, right? Because you have 1, 2, 3, and you shoot for 4, which will be the 1-to-1 move. So this leg right here will be this size, where this started moving to the upside. So that's what we'll be shooting for. I don't have any trade right now, no opportunities to trade this right now. We did break the two level, so that's big. Crossovers bullish and nice angulation, thin cloud. Chiku spans above price, price above the cloud, CK crossovers bullish. Everything is bullish on this chart. So let's just wait patiently, see where it's going. I don't jump on these things once they already started moving. I like to trade at levels. Therefore, I be jumping on a train that left the railroad tracks, that left the train station. So therefore, I have to run on the tracks to jump on the train. And if I miss the train, fall, I may get my leg cut off, just like I could get my account cut from trading bad trades. So therefore, I wouldn't be doing that. All right. So let's move on, because we don't have anything with this Swiss franc yen right now. We need to see a correction. So Euro Aussie. We broke structure here. Chiku span broke above Kijinsen, and it's still above Kijinsen. Your crossover is bearish at this point because you got a correction here, but the cloud is flat. So you have no real momentum in the market, really. We had a 1, 2, 3, 4, 1, 2, 3, and we still have this 4 to the upside. I'm not in love with this right now. If anything, it's mixed signals. So I don't know what the market's going to do. We could probably see it, possibly that it could drop back down to this level. All right, maybe see it back down into this area. We are making higher lows. Okay, so you could see that. Making these higher lows, you got a low here, then you made a higher low, and quite possibly a higher low depending what the market does. If it continues to go lower, then we may see a double bottom down here. But at this point, I don't have anything because we're crossovers bearish. Future's bright, but it's flat, so it's a bullish future. It looks like it's getting ready to cross over also. Chiku span still remains above Kijinsen and above price. So therefore, once we see it break below, then we're probably going to see the market push back to this level. All right. We're at the point where we could see everything change over. All we need is a little move here, and you would see a bearish cloud at this point. You have a bearish crossover here. Chiku span would then be below price, and then you would see price be below the cloud and pushing probably to this level. So I wouldn't be trading until I got to this level. It's a flat market. I mean, I could trade short actually to this level based off of Ichimoku because everything would be bearish at that point. But for me right now, I'm not going to trade anything. I want to see what happens if it gets here. All right, so hopefully that helps you out a little bit. Let me delete that. Move on to the next. Euro CAD. Euro CAD has broken structure, starting moving to the upside. Chiku span has broken above Kijinsen, bouncing on Kijinsen maybe, but inside of price, so we're kind of flat here. Tells you your ranging market. You're flat here also. So what I'm looking for, we do have N wave structure that's moving to the upside. 1, 2, 3, 4. That's one N wave to the upside. Then we got 1, 2, 3. If this is 3, we're shooting for 4. So if this is 3, let's say that's 3, then the market has to hold at this level. Our future is bright, so we got bullish there. We got a crossover that's bullish. Chiku span's above price, so that's bullish. Price is inside the cloud, so we call that turbulence, basically. Flying a plane, you're inside the cloud, you're going to have turbulence. So we don't want turbulence. We want to get outside of the cloud. So therefore, we want to see it push higher. Where could it push higher? Let's say this is the bottom. So let's say we have 1, 2, 3, and we're shooting for 4. Where's our 4 level going to be? Let's see. And that's just if everything's the way it is right now, if we start to push higher. Then we would shoot for about 147, 842, then maybe 150, 533. All right, you got to get through this 2 level, which is at 146, 179. But yeah, I would be looking to see what price does. Now, if we break below the cloud, again, we're right at the point where things could become bearish again. Then we would see things move to possibly back to this low. All right. So we could see the Kumo breakout, and then we'll get a crossover here, and then the market might push back down to this level. But if not, I think we hold here at the cloud, then we push higher. If you're afraid to take a trade at this level, then wait for the Kumo breakout. But at that point, you're probably getting to the because the closer you get to the breakout, the closer you get to your target also, which is the 1-to-1 ratio. So therefore, this is why I like to trade at the 3 level, so I can catch most of this move here. So I would look for that level, but I want to see price action entry in this area. If not, it's going to violate and go to the downside. Then I'm all over with. All right, Euro Swiss franc. This is bearish and continually trading to the downside. Where could we catch an opportunity with this? I mean, because this is really bearish. Nice bearish market. You could see that. But where can we get an opportunity to catch this train? Well, back at the train station. What train station are you looking for? I'm looking for that fractal train station. So there's 2 fractal levels. We haven't broken too far below, but then we push right back to it. So then I'm going to mark this other fractal and make it a zone. So I'd probably be looking for my short trade in this area here. Probably more likely just off of Tenkan-sen or Kijun-sen bounce to the downside. At this point, it's a strong bearish market. There's no signs of this changing direction right now. Angulation on your clouds. Look at the clouds. Angulation, span A and B to the downside. Look at angulation on Tenkan-sen, Kijun-sen. Chikou spans below price. Your crossover is bearish. All right. So Tenkan-sen, Kijun-sen are bearish. And the market continually moving to the downside, breaking structure. All right. So the only way to get into the trade is where I'm telling you. And I'd be looking for a trade back up into this area where we are now. Quite possibly maybe a Kijun-sen bounce. I think the market opened. Is the market open yet? I believe, yeah, it's open. Just opened, what, 9 minutes ago. And here's where it opened up. So I do think we're still bullish. Where would the targets be? Let's look. Let's see where our targets will be. If this is the low, and it probably is. Whoops, my bad. Did that wrong. This would be the low. And I can't give you any targets because I need to see where the correction is. But let's say it's in this area. We'll probably be shooting for about 102,780. Because I'm thinking we pull back to Kijun-sen or to this zone here. But if we pull back any deeper, then these numbers are going to change. All right, so let's go to Euro Pound. Euro Pound, very flat market. You could see the cloud. Too many crossovers with the cloud, first of all. Crossover, 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 crossover. Too many crossovers. With those types of crossovers, we're flat. But we're starting to see a little angulation here. So that's off of this move here. But we didn't violate structure. So we pretty much came to a double bottom here. We could probably see a correction. The reason I'm thinking maybe is there might be a correction is because of this. Double bottom at this low and this low. So we got, let's draw this here. So this low. On our carry, we've got a little bit of divergence, bullish divergence. So I'm thinking we could see a correction here. And I'm thinking we don't break this level. And I'm thinking we get a pullback, flat Kijun-sen, bearish crossover. Your future is bearish. Chikou span is slightly above price. So we got a little bit of a mixed signal. I think we see price correct a little bit and then maybe drop back to the downside. Where could it correct to? Let's mark the levels that it may correct. And then we could look to short. So I'm going to show you the way that I'm thinking the market may do. So here's the fractal right here. So we could pull back to this fractal level and then drop back to the downside. So if it does do that, let's draw this target. If it does that. if it does that, we're going to be pushing here. We go here, and then we push up to here, and then we shoot for this level down here at about 82664. Maybe get through this level also at about 833.61. Got to get through the 2 level too, because that'll be a fluctuation. But it may not pull that far back. Who knows? But if it pulls back to this level, this is where I look to get short. Crossover's bearish, futures bearish. Chiku span would be bearish still because it's going to go move up, but it'll be under this price here. And then I would be looking for the market to short at that point. Now we could, and also this would be a big zone for me. And I don't like the trade zones this big, so that's why I didn't mark it. But it would be this big because this is the fractal zone. But it's too big for me. So I would look for the trade at this level or about my Kijinsen. You still have resistance from the cloud, and you could see that happen at that point. You see the market drop. But I think we may get a push off of this level, double bottom with divergence, looking for the market to move a little bit higher. Euro yen, daily time frame, found a bottom here. At this point, when we hit this bottom, we had some divergence, all right, and the market pushed up to the upside. We broke structure, broke this last area. So the market looks strong to the upside, but we just broke Kijinsen, all right, and then now you're starting to see your future still dark. May see a correction, all right, so our correction levels where we're going to look for the market to pull back to before we get into the trade is going to be here, which lines up with our Kijinsen. Also would put the Kijinsen in the middle. So I'm looking for the market. I don't know how far it's going to move up higher, but a correction back to this level before I get into the trade long. All right, N wave structure has developed to the upside because if you were going to be an N wave to the downside, if the market was going to be bearish, you would have to do this. So this high, this last high, you would have to be 1, 2, 3, and then 4. But instead, we didn't do that. We went 1, 2, and then we broke this level. If we break that level, structure's broken, we start looking for the new N wave, which would now be, we already have an N wave that developed. All right, so now we're looking for the continuation because we have a low here and basically a little bit of a higher low or even low, but then we thinking the market could do this for a new N wave to the upside. All right, and if that's the case, let's say that's going to be the high. Let's look to where if we do pull back to the areas that we're talking about, we would then, and I usually don't put these levels until we pull back. I don't mark these levels until I get to where my pullback is. But I'm marking them now just saying, let's say we pull back to the top of this level. We're going to be in this area here. And if we pull back to the bottom of this cloud, not the bottom of the cloud, but the bottom of this zone, then we would be here. All right, and we need to get through that 2 level. But these would be our targets. And you just draw these targets once you get your V wave. Your V wave is just this, your 3 level. That's the V wave. Here's your I wave. Then your V wave, your I and V, I to 2 I's make a V, and 3 I's make an N. All right. And this would be a Z wave trade, because that would be your Z wave. And we'll be getting into the market here, and then taking this long trade, which we then count on this N wave right here. So hopefully you see those patterns, see those structures. Those are the things you look for to tell you which direction the market is moving. Don't need anything on your chart to see those kinds of structure. It's not anything with Ichimoku clouds or TK crossovers or anything like that. It's just basic market structure with Ichimoku that you get from your Ichimoku theories. Basic theory that I'm using is the wave theory, wave analysis. All right. Euro New Zealand dollar. Had some divergence here, regular bullish, and the market pushed higher. It looks like we got a new N wave structure. It starts like this. N wave pushing. And then we're looking for the market to move higher. We push back to this Kijinsen. Now we're getting a crossover that's bearish. We're bullish with the cross, with your future. You're bullish here. Chiku span broke cross price and Kijinsen. So I think we're bullish. We are getting a crossover, but I think that's because of our correction here, because we had too much distance right here with Tenkan-sen, Kijinsen. Therefore, you found the top and then the market corrects because you got too far away. When you get too far away, you're out of equilibrium, okay, and then the market's going to pull back. It's going to pull back to levels, all right, and pretty much the level it violated this structure, so we see it pull back to Kijinsen. Remember, we get this far away, it's going to pull back, and Kijinsen needs to get closer to price and Tenkan-sen. They're not going to operate that far apart, all right. You can see when it gets too far apart, start to get a correction. Too far apart, start to get a correction. But I think we're still going to continue to the upside. We got a high here, higher high. So the next thing is we want to see a higher high. We want to violate that level. All right, but I don't know what we have right yet. Kind of structure is a little bit of messed up price action right here. So I'm not going to look for anything yet. I would box this in though. Let me box this in. Let me box this in. Let's see what we got. We're inside the box. Let's break that box. We'll break that box to the upside, then we'll see the market move to the upside. We would then shoot for our targets. We'll know our targets because we're going to mark our levels. You're going to start from 1, 2, you're going to pull it to 3, and then you're going to shoot for 4. If this is the case, if this is going to be, if we don't violate the box to the downside and we continue to the upside, then here, and also we did have a slight crossover here, but you could start to see angulation where they both are together like this. When you see angulation like this with Tenkan and Kijinsen, you need to be on that train. So this could be the start of that also, if this is going to be moved to the upside. And our target would be we'd be shooting for this level way up here at 173086 for a 1-to-1 measured move. That's where we look for the market to take us. Now also look at this level too. It'll be a 61.8 move, 1.70182. But I shoot for this main end level. You got to be able to withstand some things too, and you need to violate the 2 level. You always got to get through this 2 level. If you can't violate 2 level, you're not getting anywhere except fluctuation. So you need to violate that level for this to continue to that. All right, or that. Always got to get through that. So that's what we see right now. Let's continue. Euro USD. Euro USD was in a nice little P wave structure. Looked like it's trying to break out of that. Show you this structure right here. Kind of break like this and like this. So it looked like we kind of broke out of that structure a little bit. So we're starting to see the move to the upside, but we haven't really broken real structure to continue the move to the upside. Let me show you what I mean. So in order to really start to see the move to the upside, we need to violate this level first. All right, and we didn't close above that level. So therefore we're flat right now. We do have a crossover that's bullish. Cloud is bearish, but you see span A is rolling over, span B is flat. Chikou span is not above Kijinsen, but it is above price. So that has shown us that we don't have anything. We're probably going to see a flat market here ranging. So therefore Euro USD, I don't love it right now. What I see with Euro USD, it's sitting between this zone right here and unable to break that. If it closes above that level, then you start to see something happen. But at this point, no, not right yet. We did make a higher low, which is a good thing for the move to the upside, because you had this low, then higher low. You want to see a little bit move, higher low, and then maybe break the Kumu. But at this point, it's nothing. I'm not going to trade this. Now, I would trade this to the downside, depending on the price action I see here. Because this is actually a decent trade for me, because I like to trade inside these zones, and I like to walk the zone. And where we are now, I always put a short at that level with a stop loss above, and then look for the market to break. I just don't like the structure where we are, but we are still bearish. And Chikou span is far from breaking Kijinsen at this point. So therefore, we could look like what I would trade is shorting at this point, stop loss slightly above, can we get back down to this level? All right. And then if we do, can we get back down to this level? And then here. That's what I would be looking at and thinking if I'm going to take that trade. All right. Let's move pound Aussie. Pound Aussie, pretty flat. Could see everything's flat. I'm not really going to give you much on this. We're making higher lows. We've broken some structure, but now we're in between things. So let me show you why I'm not really going to talk about it. Look at that flat cloud. Look at that flat Kijinsen. We found resistance at Kijinsen, which is cool, but there's nothing for me to really talk about there. I don't think there's an opportunity. You may see the market drop though, because we found resistance at Kijinsen. You may see a little drop. Will it violate this structure if it drops? I don't have a trade opportunity. I don't like the price action right now. We're a little flat. There's no momentum at this point, so we'll see. Pound CAD. All right, so this is good. So Chiku span broke Kijinsen end price, so that's good. Change of direction. N waves to the upside now. We violated bearish N waves. Now we're creating a bullish N wave. We already have a V wave developed. So remember I told you, here's the big sign with this. Look at the distance. Here's Kijinsen. Tenkan-sen, and here's Kijinsen. They're too far apart. Okay, you don't want to see that. When they're that far apart and prices up here, you found the top, the market corrects itself. How far is it going to correct? Well, I'm going to show you where I think it could correct based off of the way that I watch the market trade a lot. I'm going to look at my fractal zones first. Market pull back to my fractal. I'm going to look for my trade here. If it violates my fractal zone, then I'm going to look for a bounce here. Let's say we bounce where we are. Here's what we're seeing. We have an I wave. Now we have a V wave. Let's say the V wave, we pull back to the bottom of this level here. Then we're going to shoot for our N wave. Need to break this level here. So you have 1, 2, 3, and we're shooting for 4. Where's 4 going to be? Let's see. I'm looking at trading in this area right now. So currently we could be in a trade opportunity. If the market drops to the bottom of this zone, then put an entry at the top or in the middle. All right, with a stop loss slightly below. If it backs down to Kijinsen, then we're going to bounce off of Kijinsen and look for the move to the upside. Some traders will wait for the breakout, the Kumo breakout. But what I'm going to look at now is where are my targets. All right, so my targets are going to be, go from 1, 2, and then to where 3 is. So if 3 is where it is, then we're going to be shooting for 177,390. Need to get through 2 though, remember that. And then also look at 174,902. But if we drop a little lower here, let's say we drop down to the bottom of the zone. Then we're going to be shooting for about 176,851. Definitely got to look at 174,363. And then overall, we could look for the farthest we may hit is this E level at about 180,877. Okay, but we need to see what happens right here, the next candle or two. All right, we get a bullish engulfing, then we're in here, then this will be the bottom. This will be where we would talk about the trade. We will be looking at it there. We get a candle that pulls all the way back down here and rejects, then we will be looking at starting our level from there. So that's how you mark your targets. All right. So that's what we're looking at. Pound CAD, pound Swiss franc. Oh man. So pound Swiss franc, let me show you a couple things real quick. First of all, you have your N wave structures. Always see what you got going on. See how the market's doing. That's what we're thinking right now. All right, haven't broken any structure. Now, small level here, but this is real structure. Haven't really broken that. So I think we still continue to see the move to the downside. Remember, we talk about trading at these fractal levels, right? So I look for trades at fractal levels, which are going to be S-wave trades. So the last S-wave trade on this chart, I think, was this level. Because this is a fractal level, so you pull back to that. So the market broke to the downside. Everything's bearish. So when the market broke to the downside, you had this S-wave. that develop, and then you trade the S wave. Let me show you. So this is what the market was doing. Pulls back and then here. So where was my trade? My trade would be here. And this is all that I'm looking for every time I'm talking to you right now. Because here's my S wave, which starts right here. It breaks this low, and then it pulls back to that low, which is a fractal. And that's now the S wave. And then we start to look for our targets. How will we find our targets? Let's go here. Whoops, I don't want that. So like, let's say we traded this because we got a Kijun-sen bounce lined up with an S wave trade. An S wave. Sorry guys, I was losing it. But this is an S wave, so S wave trade, and then your target. So you would be shooting for where's your target going to be, where you're going to look for your trade target. You'll be 1, 2, and then 3, and then we would shoot for this level here. We just missed it again, but the market pulls down here, and again it could still move down to this level. So I would keep that on my chart. So that was the one S wave trade. So now I'm looking for another S wave trade down here. This one wasn't a zone because there's no wicks on this one really. So therefore, if I would have marked it, it would have been just this level right here. The market kind of violated it. Okay. Looked like it was going to honor it here, dropped a little bit. Looked like it was going to honor it here and then drop, but then pull back up. So do we have some divergence here? We do. So therefore, the market pushed a little higher. We got a crossover that's bullish. Flat cloud. So maybe we've lost a little bit of momentum at this point. All right. So I don't see any opportunity to really get into a trade. I would box this all in and then see which way the market's going to violate the box. But nothing good right now. Need to wait, see what you got. Not a trade on every single pair that you look at. We're overextended here. I can tell that already. We're getting some distance between Tenkan and Kijun-sen, but we don't have that big of a separation between Tenkan and Kijun-sen, but we're getting distance from Kijun-sen with price. So we're getting out of equilibrium. We will pull back eventually. You got a crossover here, flat cloud that's rolled over, starting to cross over. It's going to be a bullish crossover. We violated the structure level. This was the first structure point. So when you violated that, now you know that you're in a N wave to the upside. Where could we pull back to? Where could we pull back to? So look at this structure. So here's an order block right here. This is an order block. Market pull right back into it. So at this point, I would be looking to short. But now I'm not going to short based off of Ichimoku because I got a crossover that's bullish. Chiku span broke above the cloud, and it broke above price, and it broke above Kijun-sen. Everything is bullish except my crossover, except my future, which is starting to change over right here. It's going to probably change over pretty soon. So what I do think price is going to drop for a couple reasons. Because you got a flat cloud, but span A is rolling over, getting ready to cross over. So a bullish Kumo twist, but I think you correct. All right, where would we correct to? Couple levels. So here's your fractal. It's a big zone. I'm not going to mark it as a zone. Just going to mark it as a level. Could pull back to that level, which is Kijun-sen, maybe your cloud level or this fractal level. If it's going to be a strong trend right now, this is the fractal level that the market may pull back to. So we may drop back into this zone and then continue higher. If you're a Fibonacci retracement type of guy or person, girl, then you would do this. Let me get rid of that. Sorry. So then you would start to look at where your fibs are. You would go 1, 2, and then you would look for your pullback 23.6, which is going to be this fractal level. You get a 23.6, then that means you're in a strong trend if we can't violate 23.6. Your 38.2 is going to be around the cloud level, and then your 50 is going to always be at Kijun-sen. If you got a 26 period move, all right, you're always going to have this within your Kijun-sen. It's always going to be the 50% retracement level. So you pretty much know that. Tenkan-sen and your cloud usually line up around 38.2. So a lot of times I don't need fibs on my chart. I just go by these levels. My fractals and Kijun-sen and so forth pretty much line up with these levels that we're talking about. So therefore, I never throw retracement levels on my chart. I kind of know where they are. And again, Kijun-sen is always going to be the 50% retracement level. So that's why we always, a lot of times, say we're looking for a pullback to that level. It's always going to be the 50% retracement level in a 26 period move, 26 or lower. All right, so therefore, I think we're at a top here. I'm not going to look to trade right now. Price could continue to move, but maybe we pull back up to we go to this level. I don't know if we get through this zone right here because this is a bearish order block. So I think we see the market drop and then maybe push up again. We drop down into this zone here. That's what I'd be looking for right now. So I wouldn't be shorting this. Now, if I have nothing on my chart, I probably take a short here. If I'm not trading Ichimoku, I'm going to take a short here off of this order block trade. I'm going to look to take this short. It's not saying that we're having a bearish or bullish market. It's just the move off of this level. All right. Based on Ichimoku, we're starting to turn bullish though. So let me move on. That's pound yen, pound New Zealand dollar. We have regular bearish divergence. It's still developing. You can see there's some divergence here. And I don't really consider divergence until the market gets to support and resistance levels. So that could last for a long time. I don't have any type of trade really. My setup level would be right here for a trade. Need to see it come back into this area. All right. And then I would look for a long opportunity off of the fractal bounce right here. All right. That'd be my S wave. Again, let me mark it for you. You start from here, you go here, you go up here, and then you come back to this level again and then shoot for the trade. We trade here. Maybe it pulls back to Kijun-sen, and then we shoot for 4. Where would we find our 4? How would we find that? 4 would be our target. How would we know where to go to? Well, use your tools like I do. I'm going to mark right here. I'm going to mark right there. If we pull back that deep, we're going to look for this level to about 2.00692. Definitely need to get past 199.026. And this level here at about 197.900. But we still haven't seen the correction yet. But once we do, I think we pull back into this area and then we go long. Everything on Ichimoku is bullish. You got a cloud that's getting thick though, which is not a good sign. All right, a little bit of angulation, but not much. Flattening out on span A, and you're getting thickness. Thick clouds to me, this wouldn't be one. It's just thick right now. I think we get a correction, but then we could still see angulation. All right, I'll show you what I'm talking about with a thick cloud. But I'm looking for a correction back to this level. Then I would take a long opportunity. Pound USD, bearish market because you're breaking bear fractals. You're not breaking bull fractals. You're continually breaking bear fractals. You could see, haven't really breaking any bull fractals, and you're making lower highs and lower lows. But then we broke small structure here, and I would always been looking for a correction at this point to correct back to here to trade long, and still could have that. But right now, I don't trade the Kumo breakout. We may see it, but what I look for is the correction back into this zone here, which line up with Kijun-sen. This is kind of a thick cloud, not really a thick cloud. Depends on how you make your chart. It's not really a thick cloud. It's a little bit of a thick cloud, but it's flat and it's rolling over. That lets you know you got a bottom down here. All right, and there was some divergence, and then the market moved to the upside. We weren't able to break this low. So with the process of not being able to break that low, we had some divergence, and then the market pushed higher, broke Kijun-sen, broke structure here, but hasn't pulled back yet. We need to see that pullback. All right, so we need to see if we're going to get through this cloud. I think the cloud holds resistance for us. We pull back, then we look for the breakout trade again, or the bounce trade and the move higher. But at this point, nothing for me. So remember, we talk about fractal level trades, which are the S-wave trades. Again, always mark your fractals because you could look for trades off of those levels. See this fractal right here? Market comes down, bounce, makes a move, breaks this fractal, pulls back up into the zone, then drops back below. You could look for that on every move to the upside and downside. I'll just show you. So we're bearish here. I would be looking at fractal. We never pulled back. I would be looking at this fractal. We didn't honor that. I would look at this fractal. We didn't honor that one either. Then the market got kind of flat here. Wouldn't really be looking at any of these levels because we didn't honor. Here we had a fractal level. It bounced, but then it broke higher, so that didn't work. This level was right here. You pushed it and touched it, and then it dropped. And then you're right at another fractal level. If the market's going to change, we broke this level, and then we pull back to the fractal level, then move higher. All right. So right now, no trade opportunity. Just need to look for what I was talking about. Okay, we're almost getting done. New Zealand dollar CAD. You're making lower highs. Found a bottom here. Have we made another high, higher low? Not yet. So we need to see what the market's going to do. We're kind of flat here. We got a crossover that's bullish. Chico spans below price. So we're getting mixed signals with our crossover. We got a flat cloud that's not doing much. Everything's flat. This is flat. I don't have a trade for you with this. I don't love it either. I want to see if it gets back to this level. Maybe we start to see what's going on with this. All right, it is bearish at this point though, but I don't have a trade. All right, so that's New Zealand dollar CAD, New Zealand dollar Swiss franc. Again, another one that's not too good. Remember, you get too far away, Tings and Keatings, and the market flattens out and then corrects. Now you're getting ready to get a crossover. Your angulation though. So I don't know if we're going to see. Look for this now, because if we get that crossover and the market pushes higher, then we're going to see the break of structure maybe. But so far we haven't broken structure. So watch to see that Tingen and Giesen don't give you an angulation trade, which is going to be like this. Let me show you if I can see a good one. So angulation trade would be something like this. They're tight together, real tight. See if I see a better one. I mean, they're tight together here, but I want to like this. See this? They're literally together. Well, not really on that one, but that's how it is. It's angulation. They're both pointing to the downside. Here's another one. Here's another one. These are just good angulation, but not. This is like they're right together right here. You definitely want to be trading that direction. So what we see right now with this, all right, we could start to see them both aiming to the downside. If the market can't violate this upper points here, then we'll see a break to the downside. We'll break this structure because we'll continue to make lower lows. Your cloud is a little bit thick, but you do have some angulation on span A and B starting to aim to the downside. That's why I'm thinking you may see an angulation trade here. All right, and you can see we kind of gapped down today. Right there. So watch for this angulation to the downside. Other than that, I don't have a trade for you right now. We're actually inside of a box. I think the whole box you're inside of is like this. Actually inside of this range area and not getting much action. So that's where you are right now. If you want to really trade this, you can go to a lower time frame, like a 4 hour or a 1 hour, and trade these levels. All right, but if I get that angulation trade on this on the higher time frame, I'm gonna go right with it. So New Zealand dollar yen broke a little bit of structure here. Again, look for the market to maybe pull back to that structure level. We just got a crossover with our TK crossover that's bullish. Spans are aiming both directions, opposite directions, so you may get a crossover here, but it's still bearish, pretty bearish. Chico span has not broken above price, nor the Kijinsen. So this is bearish. All right. Let's see if the market's going to drop and hold this level. If it can't hold and it breaks below this zone, it's dropping lower. So it would drop at least probably to the bottom here. Give you another triple bottom. But if it doesn't violate this zone here, then we're going to see it push higher. At this point, I need a correction to trade or a Kumo breakout. But we'll still have a dark future, I believe. So I'm not going to trade that. So I don't have anything for you on New Zealand dollar yen. In New Zealand dollar, US dollar, thick cloud. The cloud is a little thick and starting to roll over. Haven't broken structure yet either, though. Now watch for this annulation trade. If we're going to get momentum, then you'll see that happen and you'll break structure at that point and see the market move to the upside. But Chico span hasn't broken above price. Everything is, so I think you're like ranging here. You're flat. You got a cloud that's flat and a little bit thick. It's not really doing much. It's trying to roll over here. If it starts to roll over, then we'll start to see the violation of these levels. Then it'll push higher. You'll see this roll over. All right. And that's what I would be looking for. But right now, I don't like anything with it. We could do this. Box this in. Box these levels in. See what we get. If we break above, then we're probably seeing the market move higher. We'll probably have annulation at that point too. But we'll still be pretty bearish because we're below the cloud. Future is really dark. Chico span is below price and hasn't even touched Kijinsen. So we're very bearish. All right. USD CAD. It's a bearish market, a bullish market, and haven't even broken structure. This is the last structure level, but we are getting a crossover. So what I am expecting, let's see if this level is going to hold. And then see what we get. At this point, it's still bullish for me. So I don't have anything right now. All right. USD Swiss franc. Flat market. Too many crossovers with the cloud. It's a very flat market. May push back to this double. Pretty much got a double bottom here. Sitting on this level. Make it into a zone. It's going to be right here. So that would be my zone of support and resistance. Ichimoku's flat. You got too many crossovers. Your cloud crossovers 1, 2, 3, 4, and then now. So that means we're flat. So the flat levels are going to be where I'm going to mark right now. We're trading between these levels right here. Pushing back to this point. Let's see if we get a move to the upside. Think we get a bounce off of this level. Ichimoku's not helping me much here. I'm looking for a bounce off of this zone and a move back to the upside. I would take Ichimoku off my chart. Look for my move on a lower time frame. A bounce off of this level. We're at about 91065 and 90907. That's going to be your zone. All right. If the market can violate the zone, which I don't see, but could, we violate and then we look for the correction before we trade. All right. Because we don't want to get caught in a fake out. All right. But at this point, what I'm exactly looking for is a bounce off of this level and a move higher. So I'm looking for a long off of this level. Ichimoku's not playing any part for me at this point, so I would hide it. All right, so last one is going to be USD JPY. This is a bullish market, right? But a weak market, right? Let me show you. Look at this divergence here. So I don't really play divergence till it gets to a level. So for me, the level has to be maybe this double top right here. So if we push back up to this level here and we got this divergence, I'm probably looking for the market to drop at that point. Even though everything is bullish on Ichimoku, you need to be aware of that divergence and that level. You could see we had regular bearish divergence here and the market did drop. Now we push back up on this level. Even though Ichimoku was bullish at that time, we still did drop. So we're pushing back to that level again, which would be a double top. We probably see it drop again. All right. So therefore, we're probably going to get stuck in between a range maybe, which could be these levels here. All right. If we can't get through this level at 115, 441, if we can't get through that, we're going to be seeing the market range in here. And then Ichimoku will become flat. That's what I'm looking for. I'm looking for a bounce off of this level to move to the downside. Now that's not in line with Ichimoku. It's just in line with what I see with the market, with the divergence, with this high here. being a double top, possible move back to the downside. That's what I'm looking at. As far as Ichimoku, it's bullish, but it would have been left the train track. It left the train station already, and there's nowhere for me to trade it. All right, so now it's pushing up to this double top. I want to see what it's going to do at that point. All right, so that's what I got for you. USD JPY, that's everything. Went over everything. Did take a little bit long, hour and a half, but last video was 3 hours. I cut that down, half of that now. So I don't know how fast I could get these things done using showing you this much of the market, but hopefully it helps you guys, helps you to learn how to look at Ichimoku and use it to do analysis with it, and then also looking for levels and targets and how to trade that way. And then when I do see trades, I just definitely will tell you which ones I do see possibility for this week or whenever it's happening, if it's even now. So hopefully this helps you out. There will be better opportunities, but there's a lot of opportunities at the levels that I've told you on the chart. If you mark those levels, watch for the market to come back to those levels, because that's when you get into the trade, and they're going to help you at that point. If you like this platform, really, this platform is really nice. Look at the bottom down here below. There's a link there. It's going to tell you, click that link and you can check out the platform, Quant Tower. What I really love about it, let me explain it real quick, is that it does have what we call the power trades here. Now, it's not going to show on Forex, but trading stocks, futures, anything else that has volume, and these have volume, but you have better volume analysis with those types of assets. You'll be able to trade the power trades, and I'm not going to be able to show you because I really don't want to change over. But you'll be able to look at power trades, and you'll see it in my next video when I'm analyzing crypto or futures. You're going to see the power trades on, because they're going to make zones for me, which are going to be these order block zones that I'm going to be trading, and you'll get a better feel for that when I put out the order block trade zone, the order block trading video, which is going to be definitely this week. So you'll be able to see that and probably be able to look at some of my other trades that I've made. And hopefully what I'm doing right now helps you. But guys, I'm done. I'm out. 5,000. So I'll see you next time. Have a great one. God bless.